Hi guys. I believe that we can start already. It's 9:20 GMT. So we are here to discuss the UK CPI data, which will be out in about 10 minutes from now. And here today for you, here are me, of course, and Max. We'll cover the technicals later. So, regarding the data release, as you can see at the current moment, the forecast stands at 0.2% year-on-year, sorry, and the prior figure stood at 0.1%. And talking a little bit more about the projections and, of course, the historical movement of the indicator, I would like to kindly remind you that the CPI has been hovering close to 0% for months already. In January last year, reading was deep in negative territory. It fell by minus 0.9% month-on-month, bounced back since then in February and March. Yearly growth in CPI has been negative for the first time in April in at least 50 years and remained close to zero since. CPI was at 0.1% year-over-year in November. For this particular release, not much change is expected here. The annual rate is seen weak at just 0.2%, as I said before, and also is expected at 0.1% in December, the same as in the previous month. The core inflation, meanwhile, should also remain unchanged at 1.2%, according to the Economist median estimates. Price growth in the UK remains very subdued, and December will see inflation very low to zero for the 11th consecutive month. The Bank of England has again revised down the short-term outlook for inflation, saying the annual rate of CPI is expected to rise more slowly. Sorry? Well, yeah, CPI is expected to rise more slowly at the turn of the year when compared with November estimates. This is mainly due to some further 40% drop in oil prices since the November inflation report forecast, it says. Inflation readings will be closely monitored by both market players, of course, and the officials of the Bank of England, as it is the key concern of Bank of England at the moment, I think, before considering raising rates. However, the Bank of England Governor Mark Carney and other officials have clearly indicated that inflation might stay low in the near term due to lower energy prices. The latest inflation report shows that inflation may remain well below the BOE target of 2% in 2016, even if rates remain at the same level. So let's move on. We have the economists' estimates on the matter, and according to their views, we have the Bloomberg survey summary as always, where the median estimate stands at 0.2%, average at 0.16, the highest estimate was 0.3, low estimate is at 0, and the number of estimate is 32 this time. And here I would like to mention the comments from the research team at Danske Bank. They say that we estimate that CPI inflation was unchanged at 0.1% year-on-year in December, while CPI core inflation declined to 1.1% from 1.2% year-on-year in November, as does the team. And of course, moving forward, last but not least, our Dukascopy community members' sentiment on the sterling versus the US dollar currency pair. And as you can see on my screen, traders this time went a little bit more bullish for this particular currency pair at 54.48% versus the 45.52% bearish votes. And of course, you can see a couple of comments from our dear, I will enlarge them as well for you, Yes, as I said before, these are the two comments, one from the bullish, one from the bearish side, as always. And basically, I will not read them out, of course, to you, because right now I will have to pass the floor to Max, who will cover the technicals for you.
Thank you very much, Kate. Hello, everybody. I hope you have a great Tuesday so far. So speaking about the technical part, we have the negative surprise trading strategy today, because as Kate has just already mentioned, there are some expectations from some financial institutions like Danske Bank, which expects that inflation in the United Kingdom is not going to pick up in December up to 0.2% and will remain at 0.1 percentage points on the annual basis. And such a view is also shared by the BNP Paribas and the Royal Bank of Scotland, while Commerzbank from Germany even estimates that inflation has come down to zero, back to zero last month. That's why, and it's all, of course, because of oil price decline, which resumed in December, and it is possible that inflation failed to pick up in the country, and therefore we are quite negative on the inflation expectation today. We have the pound Aussie currency pair for the discussion, because this pair does also have quite a bearish sentiment in the market. As you can see, almost 61% of all trades are short right now, and also the long range pending orders in 100 pip range are set to sell. Most of them are set to sell the pound versus the Australian dollar as well right now. So speaking about the current trading strategy, as you can see, the pair is trading at 2.0730 level right now, and the pair actually has been quite volatile in the last couple of hours, even though the beginning of the session today in Asia was quite light, quite calm, but now we see much more volatility than it has been earlier today. Speaking about the possible market reactions after the data is released in around 2 minutes from now, as you can see from the main table of previous market reactions for the pound Aussie currency pair, the average reaction was 39 pips for the last 5 months, which is quite a decent reaction, actually quite strong one. So in case we have a negative surprise today, we can see the pair dipping down potentially below the 2.0720 level, which is the first take profit, and potentially also down to the daily S1 support line, which is placed even below 2.07 at 2.0680 right now. Also, in case, of course, we have a positive surprise, in case the inflation at least picks up in line with expectations, then we can see initial increase in the value of the pound up to the area of above 2.0750. So, since I have just 1 minute left, I will shortly mention the technical indicators for this particular currency pair, and as you can see, most of them are pointing to the downside right now, so they support the negative case for this currency pair in the nearest future, in the next 30 minutes to 1 hour. And as you can see, the pair is already actually declined some 15 pips in just 1 last minute of trading, possibly pricing in the incoming data release. Also, by the way, we have the producer price index released for the UK, and also the retail price index, which is a kind of also the inflation measure, which is a kind of unique for Britain, but nevertheless, we don't have only the usual CPI, so there is just a bunch of data from this country. I think we just have some couple of seconds to go. We will, and hopefully we will see the initial market reaction. Usually it takes place for such an important data release. Let's just wait for the numbers. We see some actual upside reaction, just a slight one, but the actual UK CPI managed to grow 2.2% in December, and I think the most important surprise that we have today comes from the core CPI, which increased to 1.4% on the yearly basis in December, which is actually quite positive because it is going. It is nearing the Bank of England's target for inflation of 2%, which is of course a good signal. But still, including energy prices, the actual CPI is still quite disappointing. Is quite low, so it hovers just slightly above zero. But still, we have managed to see some upside reaction from the sterling, which amounted to some 25 pips to the upside, and now the pair seems to be bouncing slightly back. Okay, I guess that will be all from my side on the technical analysis today for this particular data release. Thank you very much for listening. I wish you all a great day ahead. See you all tomorrow, and back to you, Kate.
Thank you, Max. So, well, guys, you can see that the data came out pretty much in line with expectations. Of course, we saw a little bit more positive, not reaction, but numbers on the core CPI. Anyway, I will not hold you for any longer because right now we have a webinar by Forex speaker, and he will proceed with his topic. But for now, we are saying bye to you. But stay with us, of course.